Hello traders, Gary Wagner here just after 9:30 in Honolulu, 3:30 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 15th day of May 2015, and this is the daily report for gold and silver. We do have firmer pricing in the precious metals pretty much across the board. When we look at COMEX futures, currently it is set at off 50 cents on the day at 12.2470. It has had a low of 12.1060 and a high of 12.2580. And as I said, currently at 24.50. However, when we look at our spot gold or Forex gold, currently trading 12.24, 12.25, puts it up on $4. $4 is in reference to the afternoon break, and that is where they fix the price on Forex and then move it up. So that's why you're getting that differential in price move. Low 11.22, high 26.20, and finally to silver, trading currently at 17.55, up about 9 cents, with a low of 17.20 and a half and a high of 17.58 and a half. More on silver in a little bit. We did send out a price alert and a trigger on a buy signal. I do want to show you the rationale behind that, as well as what we're looking for in the markets and our specific targets on this trade. So traders, I want to start today's show and today's review by looking at our 700 or half a day gold chart, standard candlestick format. And although we've not had that much action, we have had a pretty dynamic range over the last 24 hours. On yesterday's show, I talked about a pattern. It's not a pure candlestick pattern. It was identified and coined by Steve Nissan, called a scouting party, in which when you have a scenario where you have strong resistance or support, resistance in this case, that has been unable to be taken out, the basic belief behind this pattern is the market will come up and test this area. This is a scouting party right here. And it will see what kinds of orders come into the market, really test the fortitude of the bears in the market to sell this back below resistance as it pushes its head up. And the idea behind this pattern is that on a successful test of the scouting party, inevitably it forms what he labels a beachhead. And what a beachhead is on following candles, what you'll tend to get is a market moving above and starting to get some consistent closes above this price point. And that's just what we're seeing today. In other words, we saw the market very, very flat through the latter part of the afternoon in yesterday's session. And going into the evening, early morning hours, you can see that they took this market down, took it down to 12.10. 12.10 being pretty significant because if we take a look at this particular price point, and I'm drawing it just a little bit above so I'm not taking out these tops, but if you look at that, you can see a whole series of tops in which we had resistance. Here we had a scouting party for this particular area, and what this shows you right in here is where you get a scouting party without that follow-through, or without what's called that beachhead, meaning you did not get the follow-through where you had that strong green candle coming up as you do here. And that was one of the primary reasons for me reversing my initial call, which recommended that if we saw some kind of sell-off today or tomorrow, we'd actually go short. Most traders were asleep as this happened in the morning. As I talked to a few of my subscribers, they remained flat in the market, and therefore I felt safe in issuing this buy signal. I do recommend keeping our stops fairly tight. We're putting them at about 12.09, just under there. And what I'm trying to do is protect these lows that came in right here when we look at the trading activity. So my recommendation is that you should be long at this point, roughly 12.24. Stop below 12.09, and we will see what kind of follow through we get within the market on Monday next week. So to really put this week's action in the gold market into perspective, I draw your attention to this weekly chart, standard candlestick format. And if you take a look at the activity 3 weeks ago, this is where the market bottomed, I believe roughly at about 1170. you get really, it's a doji-like candle, pretty much a, call it a inverted hammer, shooting star, the same candlestick depending on where it's found within a current trend. And then you get this green candle, although not very large in size. In other words, it didn't cover the sell-off that we saw on the prior week, meaning 4 weeks ago. We certainly made that up this week. And when you look at these 4 candles on a weekly chart, you really get a strong three-river morning star variation. You also get a confirming candle here. And the fact that we're getting that, along with the fact that we're closing above this particular price point, as I said, anywhere between 21 and 23, we're up at about 25 right now. That to me signals some real strength in the market, which takes us to our exit strategy on this particular play. Assuming that we're correct and the market continues to firm throughout next week, the first one point we want to look at in terms of some potential real resistance doesn't really come into the market till about 12.55. It's based upon this top right in here. Other than that, we can look at this bottom right in here, and that is the lowest point in terms of a target area. That would be 1240. And so these are points that we would look to see how the market reacts should it continue to move throughout the week. This point here, 1240, 1258, and the absolute top of the market, and I don't think we'll see this because we've got to get through 1300 first, but 1340 and this particular top would give us absolute resistance in the market. Prior to that, though, you can see that right in this area between call it 1280 here and about 1320 here, we've got this huge congestion band in which the market's been trapped in, very similar to the areas that we saw down here as it was trading within this defined range. So assuming we break out of this range, which I believe we have a real solid opportunity to actually do that, my sense is that we've got a couple of different areas that we want to look at for potential resistance. 1300 to 1310 is really my sweet spot. I would be more than satisfied if we see the market coming up to this point and backing off. This would be our point in which we did exit the trade. So as far as silver goes, and we're looking at a standard candlestick daily chart in silver, we also issued a buy recommendation in silver. And the key was that we had these series of tops right in here that we absolutely broke above over the last 2 days of trading. Yesterday, we definitely went into the area, closed above it, and today we had a little bit of follow through, trading at around 1756 currently. We have strong indications in both our stochastics, this is our MACD, and our stochastics that we should see higher pricing. And in terms of my target for silver right now, if you notice this precipitous drop that we had right here, and then we had another one right here where we had large down days, I would think that the market, and if you come in and take a look, that's at around 18. So I think 18 is going to be our initial target to exit our silver trade. Will it go as high as 1850, this former top? Well, we're only $1 away, so it's quite possible, but let's see if, in fact, the market continues to firm up throughout the week, how it reacts, and then act accordingly. As I said, our first target is $18 on silver. This has been Gary Wagner, wishing you as always good trading. We'll talk to you on Monday for another daily update and review.